Hey, folks, we are live. Welcome to Thursday Night Stock Charts Live. What we're going to talk about tonight is what I believe is going to be a really critical Friday. And in fact, I'll add to that on Monday as well, because I believe the Monday is the 31st, because there are a lot of conflicting cross currents out there. And I've been trying to make heads or tails out of it for a little over the past week. And every time I think I have a really good sense for why the market's doing what it is, it kind of just gets negated the next day. And I'm usually very, very much in tune with why the markets are doing what they're doing. I understand it. It's just what I do. Uh, I think that I have a clue, and that's why I think that tomorrow is going to be a very critical day for the markets. And in particular, not just tomorrow, Monday, because that marks the end of the month. We're going to get a view of how the monthly charts are going to close out. And probably the first week of maybe this time next week, we'll go over the monthly charts of the major averages, and we'll decide, okay, do we look like we have a bullish new month, the month of February, or is it a concern that perhaps we haven't put in new monthly higher highs, etc.? So it's all about the quality of a close, whatever time frame you're trading on, whether it be investing, that's weekly, monthly charts. If it's swing trading, that's daily and weekly charts. If you're day trading, intraday charts, and of course the daily chart here and there as well. What else we're going to talk about tonight is Intel earnings. What happened? They were annihilated after hours. We're going to go to that chart in a moment. We're going to talk about Tesla's earnings and where I think they're going to from here. We have a lot to go over. We have a potential. What's trending on Twitter right now is, believe it or not, civil war. And I do not mean in Africa. I do not mean in Eastern Europe. Here in the United States of America, it is trending on Twitter. So let me say hello to folks, and I will share my screen, and we will get to it. Talon, thank you. Thank God I check. I always forget about the audio until I check here. Thank you, sir. Appreciate that. Jody, hello. Welcome. Sean, thank you, sir. Always good to get validated. All right, cool. All right, so let's share my screen and get to it. Let's begin with Intel. Intel tumbles after earnings, after guidance misses expectations despite strong Q4 earnings. So, forward-looking expectations, no bueno over at Intel. The future should be open now. We'll take a look at Intel stock after hours. We'll take a look at what the anticipated market makers move was for Intel and what happened. Did we exceed the anticipated market maker move, or are we in line? In short, how did premium sellers make out on their Intel trade? I bet they're licking their wounds right now. So let's get to it. Intel misses off of Think and Swim. Think and Swim. Think or Swim. And this is Tesla. Let's get to Intel. And Intel closed at $49.55 last tick, $44.61. So let's call it a $5 move. And the market maker anticipated move on that trade was $3.65. You don't usually get much of a big trade on Intel. However, they were pricing in a lot of premium on these options. 100% IV ranking. So back to Intel's chart. And usually what happens is that, wherever we settle out at 8 p.m. this evening, we'll wake up tomorrow morning, we'll be a bit lower. And then when the markets open tomorrow, the floodgates of hell open up, because fund managers really can't unload a ton of shares right now because it's thin markets. They're going to need liquidity tomorrow morning, and they'll get it at the open. So let's take a quick peek at how the futures markets are. They're not dealing with this well at all. So the /NQ, which is basically the NASDAQ 100, the Qs, if you will. They are down at current in the open at around spot 40%. Intel off of its lows. We have the VIX, which has been very, very strong. I posted on Twitter the day before yesterday. I said, watch the 60-minute chart of the VIX. It's ready to move up higher. Sure enough, it ripped up the next day, and it's never looked back since. This is a 15-minute chart, and it looks as though what we're doing here is we're getting ready to move up higher. Let's put an alert here. Ten-year yield continues to drop. We'll talk about that in a moment. I want to take a look at how the dollar is doing. The dollar showed a lot of strength today. We'll go to the weekly charts in a moment. And the dollar is off of its closing price in the after-hours session. NQ looks as though it may just break to new lower lows. This is a dead cat bounce. Let's create an alert here. I'm telling you, tomorrow is going to be an important day for the markets. There it goes. There it goes. Now down spot 4 or 5%. You're getting some volume coming in. New fit 1-minute candlestick. Vol not doing much here. Let's check out the ES. These are the E-minis. E-minis are down fractionally. NQ just broke the new session lower lows. As is the S&P futures as well. So buckle up for tomorrow morning, folks. I don't think this gets much better by tomorrow morning. Ten-year yield, that's a 15-minute chart moving up higher. Now, let's see whether or not we get a breakout here on yields. I tend to doubt it. But you never know. You don't know what you don't know. Okay, we're good to go here. So we'll take a look at Tesla. I know Tesla was rallying in the after-hours session. We put on a strangle trade here on Tesla. Deep, very, very wide strangle on Tesla. And it closed at 182.63. It hit a high of nearly 184.50, but now it's backing off. This is going to come in further. I wanted to possibly enter a trade at the open, sell covered calls, at the close and sell covered calls against it. I figured no. Weak stocks tend to get weaker. I'm worried about these earnings that are coming out, and I think that was a wise decision to make. So let's get ready for a rocky Friday morning anyway. And we'll see whether or not the markets could shrug it all off. You never know. So that was Intel. Tesla. Tesla has been a laggard for quite a while. I brought up a ratio chart of Tesla about a week or so ago, at least with numbers. I don't know if I did it publicly, but I did some analysis on Tesla, and I was showing you how Tesla was lagging the S&P 500 and the triple Qs by a mile. It's been doing that for a while now. And sure enough, earnings failed and the stock has broken down. And I don't think it's going to be getting a sustainable rally for a while. And when I mean sustainable, I mean a multi-week to a multi-month rally. We may get a dead cat bounce in the next several days. I mean, you have RSI. Let's go to a chart of Tesla now. And in fact, we'll talk about Intel, where we might get a bottom in a moment. But first, let's do Tesla. Now, this is a weekly chart of Tesla. And you can see the series of lower highs here is, telltale. It's a major problem. So I think that with Tesla, we could easily see 168 on Tesla, if not the 150s on Tesla. So I'm going to be pretty aggressive. I was hoping that they would rally Tesla tomorrow so I could sell more calls and create a ratio strangle to protect that put position. We have pivot points up here. Let's go to a monthly chart really quick, get a more defined view. It's in a monthly chart. Oh, this is a daily chart. I was wondering why. Monthly chart, Bob. Monthly chart. Yeah, this is pretty brutal. So let's make sure we have our pivot points up here. We want to take our crayon out. And there you have it. Now, don't be surprised if in February you get a rally here. And the reason why I say that is because many times when you get a breakdown, just like when you get a breakout, you get a retest of the breakout point when it's breaking out or the breakdown point when it's breaking down. So we can get a rally up to 210 around there. But then I think that Tesla becomes a short all day long, as long as the market is moving lower as well, to be fair. This is a bloody, bloody chart. We're looking at, we could hit lows of, 134 per share. Buckle up on Tesla. Tesla's a broken stock. And I don't think the news about EVs gets any better anytime soon. Looking at Intel, I haven't looked at Intel's chart in a long, long time. I know they had a pretty good quarter not too long ago. So Intel, where are we trading in the after hours? Yeah, we're coming back down here. We're going to about 40 bucks a share. And you got to see whether or not that holds. So I think that there's a foregone conclusion that that's where we're going. The question is, do we hold it? So Intel, I would not catch the falling knife on Intel, nor would I do it on Tesla. Tesla is a little bit a different story because Tesla was a bit of a surprise. Let's take a look at a daily chart of Intel. Intel's been grinding up higher, doing really, really well. Granted, it's showing some topping action with these filled candlesticks, but grinding higher, good volume these recent days. No real indication that the company as a whole was going to have poor guidance. Whereas with Tesla, different story. Tesla, first let me show you a ratio chart of Tesla versus the triple Qs. And you can see that, is this right? Yeah, that's right. clearly vastly underperforming the triple Qs. Let's get rid of the triple Q ratio. As a matter of fact, I'm going to go back to that. Take note of RSI as Tesla as a standalone stock, relative strength indicator, 17.43. Now, relative to the triple Qs, it's 13.21 on the RSI. That is mind-boggling. That's how much of an underperformer Tesla is. So I think it is possible if the markets don't tank on Intel's and Tesla's news. If I think next week we're going to get a lot of the Magnificent Seven coming out. If the markets could hold up here, I think that you're going to have a counter trend rally on Tesla, and it's going to be a nice trade. I wouldn't stick around too long, maybe up to that 210 level if we get up that high. That could be a fairy tale. But if these markets begin to roll over, folks, and there's good reason to believe that they may very, very soon, you're going to want to avoid these stocks like the plague. So let's get to the headlines. Let's go talk about what we are concerned with the overall market. Then we'll talk about the weekly charts of where we think that this market is going next. Don't forget, one trading day left to go. A lot can happen here. And I think that this is probably one of the most significant Fridays to be upon us in quite some time. So tomorrow is going to be a very, very wild day. Let's get started. So we know about Intel's earnings. We know about Tesla's earnings. But did you know about the profit margins that we're seeing out of these companies, the S&P 500? Profit margins are declining after rallying from Q3 2022 to a peak of Q3 2023. Q4 has seen a rapid drop in earnings. And what are you seeing now on the headlines? Well, Levi's reported after the hours today. What did they do? Layoffs. Microsoft, layoffs. You're seeing layoffs all over the place. Now, they'll blame it on AI, but in reality, what it is, they got to get these margins up. They want to get their bonuses. So we have earnings that are not the best coming out of Wall Street. We have margins which are compressing. You have layoffs that are coming, and yet the PE ratio on the Schiller is at nearly 33. This is the highest level in well over a year, 2 years. So things aren't making sense. And it's eerily familiar. And the only reason why I'm bringing this up right now is because one of our members mentioned it in the Slack forum yesterday. Is this not reminiscent of 2000? And the answer is yes. It's very reminiscent. Equities rallying up higher with the underlying growth of the market. And you may be saying, oh, GDP, Bob, GDP, Bob. Okay, no, the underlying health of the economy is in decline. We're going to go over those charts in a moment. So, economic data out this week. Let me go to comments here. TZ Burton, welcome. Denny, welcome. Mr. Pete, welcome. Larry, comments on Visa, rough look. Oh, did they report? Oofa. Oofa. Let's spend a moment here and let's talk about this. Visa Q1 profit climbs amid higher payment volumes. So this has got to be forward-looking, or else they missed the whisper number, or both. Visa sees Q2 net revenue growth upper to mid-high single digits, sees fiscal year 24 net revenue growth low double digit. I don't know what the expectations were. Q4 solid start, blah, 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 grew 9%, blah, blah, blah. Where's the expectations here? Okay, so Q1 adjusted DPS $2.41 beats $2.34 respectable. They beat on sales. So this is all about guidance. The street doesn't like the guidance, and that's a problem. And this is a major problem here. This is a big drop. What was the anticipated move here? An $8 move was anticipated. Now you know why volatility is grinding up higher. This is a huge, huge miss by the market makers. Huge miss. Did they price those earnings? Oh, man. Option sellers got annihilated here. They got annihilated. They did not price in this move into the options. Wow. So my take on Visa, we left the day out with RSI 80, very strong stock. Were it not for earnings, this would have gone up higher, given this bullish key reversal bar on the day. Volume was strong. So it's not as if this was in the know. So what's the where to from here? Let's take a look at where we're trading in the after hours session. It's not going to show you on the daily chart. Let's drill down to see if they give it on a 4-hour view. Wow. Bloodbath. Okay. So we slice through 265 like a hot knife through butter. And it looks as though where we're going is, I think it's going to go down to 260. Perhaps a speed bump there. But the next real serious support level on Visa is down at around 257. That's short term. Let's take a look at this on a macro basis. Monthly view. Ultimately, I think that we're going to end up. I'm sure we could rally before we hit this level, but I think ultimately we're going to head down to the low 240s, low mid 240s on Visa. I am not a buyer here. To be fair, we have to see how it closes tomorrow. Maybe the market's overreacting. Sometimes they do, but it doesn't look that way. It looks as though they're pretty steadfast. I mean, we're right at the lows of the session here with one dead cat bounce, and that ended poorly. So this does not look like an open that's going to be pretty tomorrow. Now, NASDAQ is down just shy of a 0.5 percentage point. It did come off of its lows, to be fair. Let's take a look at the E-minis. Down not even 0.25%. Vol attempted to break out. It was rejected. So what we have here is basically a megaphone formation. We have a widening higher low and a widening lower low. This could be a problem here. This is not a pretty setup. Okay. We can look at this all night long. I don't think much is going to happen. All right. That's Visa. All right. Back to our regularly scheduled program. RB. Hello, Bob. Happy Thursday. Happy Thursday to you. Yeah, RB, that's a good question. So an argument can be made for that, but an argument can be made that you know, we've been to this puppet show. We've seen the strings before where you think that you're going to get a rollover in the equity markets, turns into a consolidation, and then they just burst it up higher. So what I really look for here is I really like overbought levels on our stochastics, and then I like them to roll over. Right? And you may be saying, "Oh, it's typical. What's so special about that?" Well, what we're looking for are bearish divergences on RSI, on stochastics, and you're actually already seeing them on ultimate oscillator, which is just another momentum indicator that's putting in a bearish divergence. So the argument can be made in your camp. In fact, I was talking about it with members a little while ago that you know I think that they're going to try to press the market up higher. This is before the news came out about Visa and whatnot. But I could be wrong. I could be completely wrong, but I don't want to go shorting a market that is melting up. So even if they gap it down tomorrow, that doesn't mean I'm going to go shorting the market yet. In fact, we opened shorts yesterday, to be fair, on the semis. So I did add to shorts this week on the semiconductors specific because they're just ridiculous. And I think somebody said that NVIDIA is down 1.5%, and that makes sense to me. Oh, wow, yeah. Yeah. All right, so NVIDIA is at session lows here. They're expecting an $11 move into the close tomorrow. They're probably going to blow that away unless we rally back. You never know. We're at all-time highs, and the street has a way of when you're at all-time highs, you don't have any overhead supply above. So you don't want to be that first guy that says, "I know I'm right. This market can't go up higher." Just when you say that, that's when it does. So we'll be watching it closely, and if I think that it's appropriate, we're going to start nibbling as we did with the semis. It looks like we're going to get paid tomorrow, but I'm not ready to go getting net short quite yet. The test is always at the top. All right, economic data that came out this week. I'm going to skip this because I've burned up a lot of time. What we do have coming out tomorrow is personal income. If you're bullish, you do not want to see this come out hot. Personal spending, that's okay. That can come out hot. They're fine with that. They just don't want you making the money to pay for this. If you put it on a credit card or buy now, pay later, the street is good with that. So is the Federal Reserve. PCE index, the Federal Reserve's favorite inflation gauge, comes out tomorrow. Very, very important numbers. Now, the Federal Reserve's balance sheet this week, I kind of went out of sequence there. Sorry about that. Rose, it's beginning to stabilize. And I mentioned this, if not last week, the week before. We're beginning to see signs of stabilization on the Federal Reserve's balance sheet. And my hunch is that we start building on this. This is the beginning of the rebuild of the Federal Reserve's balance sheet. And folks, once they take this up higher on the next round of easing, you think we're going up here? No. We are going to blow through that like a hot knife through butter on the next crisis. And it's coming. It's coming. And I have the chart to prove it. Now, GDP came out today, and it had me scratching my head because I wasn't completely focused on the news in the morning. Q4 GDP unexpectedly soars, driven by lack of destocking and RV spending spree. Okay, whatever. So GDP supposedly blows the doors off expectations, rah, rah, rah. Only one thing struck me. VIX just broke out. LL is lower low. Oh, I always do that. God damn it. Whatever. That's fine. Okay. So the one thing that struck me was that when we woke up this morning, the expectations, wow, this just rose again. The expectations for an ease was at 41 and change, like 41.5. Immediately after the report, it began to skyrocket up higher. 45. Now it's up over 50. So we're back above a probability of a cut in March is back on the table. And as of yesterday, it looked like it wasn't going to happen. So what's going on here? If we have GDP, which is surging, why do we need a rate cut? Why? What's wrong? It can't be the 12 million illegals that we have walking around this country that are going to be on welfare. That can't be it. This is it. National economic activity unexpectedly declined in December. Chicago Fed index shows. But however, somehow or other, GDP is going gangbusters. Production and income down, employment down, personal consumption up, credit cards, buy now, pay later. Sales and orders, forward-looking guidance, negative. This indicates below-trend growth in the national economy and a sign of easing pressures of future inflation. Maybe, maybe not, because I have a reason of why that may not be in a moment. Need more war. GDP driving capital goods shipments are down year over year. So basically, what's happening is that we saw a surge in non-defense aircraft and parts orders in November. That did not repeat in December. Non-defense aircraft orders rose spot 4%, month over month, rising over 80% in the prior month. With Boeing's issues, we would not be surprised. We would be surprised to see its rise much anytime soon. So Boeing's going to be a weight on the economy. They're in big trouble. However, core capital shipments, a figure that is used to help calculate equipment investment in government's gross domestic product report, declined for the third month in a row. So in short, if you're wondering why did the expectations for rate cuts rise in the face of GDP, it's because nobody's expecting a beat on GDP to occur again. If anything, it's going lower. Now, this speaks to bank outflows, arbitrage shores again. Basically, the money center, not the money center, the regional banks are continuing to go to the Federal Reserve on a lifeline, which is set to expire very, very soon. So unless they renew it, I'm sure they have the power to. But this continues to leverage up. This is supposed to be a temporary fix to a crisis going back to March. It's still in use, and it's set to expire. Kansas City griefs. Manufacturing survey screams stagflation in January. So this is the reason why you're seeing expectations for a rate cut rise. And with that comes inflation. And we're going to talk about the whys inflation isn't going anywhere anytime soon, at least in energy and food, in a moment. It's already 6:35. I got to get quickly going here. 14% of commercial real estate loans and 44% of building loans are now negative equity. They're underwater on these loans. Guess what's going to happen here? You own a building and you go back to your bank who has a loan out on the building, and you're going to say, listen, I need to roll over that loan I took out in 2018 so I can pay you for the next 5 years on that loan. And the banks are going to say, yeah, absolutely. Yeah, no problem. We're going to do that. That's good news. Glad you're doing well. So we're going to value your building at about 44% less than what it was worth back in 2019. Sorry about that. Oh, by the way, the rate at which you're going to pay on that loan, well, that's now going to be about 3 times as high. Guess what that a borrower is going to do? They're going to say, okay, thank you. That's really nice of you. Well, here are the keys. Take the keys. You own it now. I'm walking away. And it's happening. It's not what's going to happen. This is already happening. Now, on a national focus, I'm not going to spend much time here. You have revolution going on in Europe. You're not hearing anything about it in the mainstream media. The mainstream propagandists here in the United States, they won't talk about this at all because it goes against the narrative. So Poland, this is France. They're burning tires and manure in front of government buildings. At some point in time, the French are notorious for their revolutions and what happens to the so-called elite, which I like to call parasites. Let them eat cake. What's trending here on Twitter, I find it shocking, but what's trending on Twitter is civil war. Border shutdown with Texas defies feds. We will continue to deploy razor wire. Now, the ruling out of the Supreme Court was that they cannot block the feds from cutting down razor wire. But why would they want to cut down razor wire? It's because they want the influx of illegals. But that doesn't mean that they can't come back in and add more razor wire and block the illegals from coming in. So the pressure is on the so-called president or whoever's running them to nationalize the Texas National Guard, or else they're going to have to impose the Insurrection Act and say, okay, we're going to have troops on the ground, U.S. federal troops operating on U.S. sovereign territory. And we are a very, very dangerous spot in history. This is an amazing time to be alive, but I would prefer not to have to witness this, to be honest with you. This is not going to end well. They need a distraction going into this next election, because if Donald Trump becomes the next president again, people are going to jail. A lot of them are going to jail, and a lot of them are going to jail for treason. The penalty for treason is death. Donald Trump should have done this back in 2016 when he got elected. That's my one big problem with him. He should have taken that Hillary Clinton and made sure that she was put on trial. He didn't do it this time. He's not going to make the same mistake. He's got to take Mark Getz, Congressman Mark Getz, congressman from northern Florida, and he's got to make him the DOJ. What's it? I can't believe I just had a mental brain fart. The DA for the Department of Justice. I can't believe I just forgot what that is. But he's got to do that. Mark Getz will attack. He will do the bidding of the president. Very, very true. Very, very true. Hey, Franklin, welcome. Hey, Bob, SMCI rose too fast along with Avago, profit taking. We'll check it out if we have time, Tom. I got to get to members first, and if we have time, we'll go take a look at it. We are inches away from a hot civil war on the Texas border. Who's going to blink first? Biden, Abbott. I don't think Abbott's going to blink. I think the courts are going to have to take this back up. I think the ruling by the Federal Reserve, it wasn't a ruling by the Supreme Court. It was an order by the Supreme Court. So what they can do is they can find another case to elevate up to the Supreme Court, and the Supreme Court could still diffuse this, because if the argument is that it's the responsibility of the federal government to protect the border, and you have the federal government going in and cutting razor wire, well, that's complete intent not to defend the border, and then they've abdicated their responsibility. And I believe there's a clause in the Constitution that allows for, if the federal government won't do it, then the states have the right to protect their own border. So I'm not a legal scholar by any stretch of the imagination. I think this finds its way back up to the Supreme Court. Amy Coney Barrett, whatever her name is, had better wake up. I know that, I don't know. I assume because he voted for Obamacare, Chief Justice Roberts is bought and paid for. I believe that he was on the Epstein Express going down to that island. So they probably got him on tape doing whatever. Amy Coney Barrett, I don't know what they have on her, but if she's trying to play nice in Washington, D.C., she's out of her freaking mind, and it's going to end up with a civil war. So they need to get another case in front of the Supremes. Amy better wake up and realize that she had better vote the right way and diffuse this immediately. So I don't know if you know it or not. I just found out about it before I went live, and I did watch this, but I'm going to share it out. Take a look at this. Apparently, unfortunately, my senator, Schumer, is authoring, and he's in possession of a bill negotiating with Mitch McConnell to try to raise the limits of illegal migrants coming into this country, to make it easier for future President Trump to come in and manage the situation. He doesn't need this legislation. He didn't need it back in 2016. He doesn't need it now. They're trying to legalize what's going on right now to tie his hands. The Republicans and the Democrats alike want this. There is a uniparty. If you haven't taken a look at Carrie Lake bribed, Google it. If you haven't seen the fact that the Arizona Republican Committee chairman tried to bribe Carrie Lake not to run for the Senate because she's not on the team of Mitch McConnell, supposedly Mitch McConnell, go listen to it. It's worth a listen. They have legislation trying to legalize all this. Folks, we are living in very, very, very dangerous times. Let's take a quick look at the weekly charts. I'm not going to go through all these because we're running out of time. I do want to, what did I say? Did I say Mark Getz? I keep doing that. Matt Getz. Great, great guy. The Republican Party hates him. That's why I love him. The Democrats probably want to shoot him. That's why I love him. I need to go to the members area, make sure I have nothing to go over, see how much time we have. Okay, we have time here. Okay, folks, the reason why I'm being extra dire this week is that the yield curve on Sunday night for last week had pulled back on the week. That has changed. We have broken out on the yield curve. And we are very, very close to uninverting on the yield curve. And when that occurs, that's when the stock market begins to roll over, and roll over very, very hard. So pay close attention to this. That's why I'm saying tomorrow, Monday being the final day of the month, that means that if we close where we're at or higher on a monthly chart, February could be a very, very brutal month for the equity markets. Do not ignore this setup. And for those that are new to the channel, please like, subscribe, ring that dingy bell. When the yield curve steepens, here's the S&P 500 in gray. S&P 500 goes the opposite direction. This is 2000. Here's the financial crisis, steepening of the yield curve. S&P 500 rolled over. 2020, same deal here. Yield curve steepened. S&P 500 rolled over. Here we are again. Are you ready? Do you have bonds? Do you have cash? Do you have shorts? Start thinking about it. And even more important is if we survive, if the banking system survives this one, do you have a wish list, a shopping list? Because there are going to be great fortunes made on the way down and even greater fortunes made on the way back up. Be a part of it. Bitcoin. Let's refresh this. This is still trading. Those ETF offerings, typical sell the news event. We sold ours at 46,000. Last tick was 39,941. I'm not ready to start buying yet. And remember, folks, Bitcoin trades as a risk asset. Everybody wants to call it digital gold. It's not digital gold. It is a risk asset. So you could bet your bottom dollar if the equity market goes, in all probability, so shall Bitcoin. Here was 2020. It did not outperform equities at all. So where do I go? I want to try to reduce the amount of time I spend here. I think that the main charts we need to focus on, beside the yield curve, forget about Bitcoin, is the dollar. If the dollar fades and breaks down and closes below the support level by the end of business tomorrow, I think we need to start looking a lot more closely at the gold mining stocks and more importantly, gold. Because if the stock market declines, so can the gold stocks, right? So gold can decline, but not as much as the gold stocks. TZ Bar, there were earnings reports you mentioned on Sunday. How did that go? Earnings reports I mentioned on Sunday. Well, the ones I mentioned on Sunday were Netflix and Tesla. And Netflix was very, very good. And Tesla was very, very bad. Now, I only traded, I traded Netflix after earnings, and then we have what you call an iron condor on Netflix. And on Tesla, I traded earnings, but I did like an experiment, small position with a calendar spread. But since it traded outside of its expected range, I didn't make money on it. So I lost a couple of bucks on it. Nothing huge, but now we have a strangle on Tesla, and that's another cash flow strategy, but very, very wide strangle on Tesla. So that's that. All right, so the dollar we're looking for a break on. Very strong day today. Why? It's because of the GDP number. I don't think dollar traders were thinking about the structural condition of the U.S. economy, meaning the Chicago and Kansas City results for manufacturing not looking good. Now, the Dow transports a heck of a day today and a heck of a week this week so far. The question is, how do we close? Do we close strong or do we fade off the highs of the week? One trading day left to go, and I think that it's going to make a big difference tomorrow. And we'll revisit these charts, some of them anyway, on Sunday Night Futures Live. Dow Jones Industrial Average Weekly View, all-time record highs as of today. The problem is there's no volume. S&P 500. Here we'll talk about some topping action that's going on. And S&P 500 weekly chart, we're up over a percentage point. New all-time highs on thin volume. So this is not mom and pop, this is not institutional money buying the S&P 500. Let's go to a daily view. Now you can see here that we are in a very, very tight trading range. And whenever you get these filled candlesticks. This is a filled candlestick. This is a filled candlestick. This is a filled candlestick. Why does that matter? Well, what it implies is that what you're seeing is, yes, it's a limp up on volume, excuse me, on price, not on volume, on price. Yet you're seeing sellers move in and they're booking profits. It can't be overhead supply because we're at all-time record highs. So it's profit taking. Now, profit taking could be finite, or if the floodgates open up, it could be very, very serious in the beginning of a major sell-off. So am I ready to short this right now? I wouldn't short it in the morning. I would wait to see how we close on the week and on the day tomorrow before I made that decision. And I probably wouldn't be shorting the S&P 500. And for the record, the S&P 500 Ultimate Oscillator, which was in a downtrend, a bearish divergence, broke out today. So the market sends us signals. This could be one of them. So let's see whether or not tomorrow we get a down market, and on that down market, do we close at the lows of the day, and do we close down on volume? If not, if we open down and close up, that's bullish. I'm a buyer. And why? Let's pause there for a moment. Why? Why would equities with Visa earnings, with Tesla earnings, with Intel's earnings, why would the markets rally? Because it has nothing to do with earnings. It has everything to do with easy money, cutting rates, and that anticipation. The problem is once they cut rates, that usually, the first cut usually marks a top in the equity markets, but they're not expecting that cut until March. Now, could we buckle before then? Sure. That'll provide a reason for the Federal Reserve to come in and try to save the day. Small caps. Weekly view up on the week by over 1 3/4%, but on the day, a faded candlestick. We need to close above 198 before I got excited about the small caps. Technology, new all-time record highs today. No overhead supply. So let's skip all this. Let's take a look at what I'm worried about in terms of inflation. So the best performing sector on the week that I know of anyway is, of all sectors, the energy sector. Bullish key reversal. If you don't know what a bullish key reversal bar is, one of my top 5 favorite candlestick patterns, link below, my top 5 favorite candlestick pattern video series. World acclaimed video series, free. Take advantage of it. I'm loving the energy stocks here. Why do I love the energy stocks? Because they're highly correlated at current, 85% correlated with oil. Oil is up over 5.5% on the week, and the week's not over yet. That is inflation. And you may be saying, no, Bob, no. That the Federal Reserve, they back out food and energy. You don't know about that. Okay. So if you're a tire maker, you make tires, you need oil. You're going to have to go to the open market. You need to buy oil to manufacture tires. The cost of that tire is in the core number. However, vertically in that core number is now oil. Oil goes into pretty much everything that's manufactured. Bubble gum. It goes into bubble gum. Yellow color, red, 30, I think it is. That's petroleum. Goes into bubble gum. Gasoline. Tell me this is not inflationary. We are breaking out on gasoline, up nearly 5% on the week. And this is not reflected in the PCE number getting reported tomorrow. That PCE number is probably going to look pretty tame. But next month's number, if this continues, is going to look horrific. Natural gas price is very weak. Let's check in with gold. We'll leave it off here. We'll do some chart requests. Now, gold is still looking fairly weak on momentum. I think what we're doing here is that we are simply pausing. We're at the lower end of the trading range. I think we're doing one of these numbers. We're bull flagging out on gold. Let's go to the monthly view. Not looking good on the monthly chart. Daily view. We broke out today. So what I want you to think about this is if gold broke out today, and to be fair, gold has broken out several times in the past couple of weeks and failed to hold that breakout point. But it broke out today with a weak US dollar. That's not supposed to happen. Add to that, the gold stocks were up pretty big today. On the week, the junior miners are up nearly 1.5%. And on the day, up over 2.25%, shrugging off that horrible day yesterday. So this is really, really bullish stuff for gold and the gold mining stocks, given the fact that the dollar is up and they're up too. So what that also implies to me is that they're also concerned about geopolitical risk. And that, unfortunately, that geopolitical risk could be coming out of Texas. Think about it. Let's do some chart requests. All right. Sorry about that. It's hard to shut that off. All right. Let's see what we got here. I didn't have anything in the members area. SMCI. Super microcomputer. Weekly view. Beautiful. All right. So the thing to take note of here is that you have a great breakout. One trading day left to go, right? We need to close above this four. Where are we at here? We need to close above 440. And it looks like we're probably going to succeed. We will have resistance up here at this fractal resistance level up at around 530 per share, probably a little bit higher. Volume's awesome, really good. This is institutional accumulation, daily view. It got extended relative to its third standard deviation Bollinger Band in black. Pause, consolidating sideways. Volume was heavy yesterday, a little bit heavy today. What you could do here, I think this is a classic candidate for selling puts. And it is optionable. I don't know how liquid the markets are there, but I think this is one that I would not buy this now. It's very, very extended. But if you want to be a part of it, you can always sell puts. But in this market environment, oh, God, daily chart, you got to avoid this. I wouldn't even sell puts here right now. The only way I would sell puts is if you do a iron condor. What that is you sell a deep out of the money put and a deep out of the money call. Same width in terms of width from the closing price. then buy a deeper out of the money, put in the call to protect that position, just in case it skyrockets higher or drops like a rock. So I would keep protection on this one. It means it's expensive in dollar terms, nominal terms. But yeah, this is one where I would be looking more towards the short side than the long side, very short term. Otherwise, it's a beautiful chart longer term, but it's going to come in here a bit. I'm very confident of that. Let's take a look at they must be getting ready to report earnings. So I wouldn't do this trade before earnings. IV rank is 60% for a stock that this strong. The only reason why the IV rank would be at 60% is if it had news coming out, important news, earnings. So I'm not sure when earnings are here, but I would not trade this one in advance of earnings. But I would go, if anything, Iron Condor is the way to go. Sean, have a good night, my friend. You could be right. If oil, Texas is a big oil producer, light sweet crude. Avago, Broadcom. I'll never get used to it. That merger. For those not familiar, AVGO, the symbol for Broadcom, was a different company called Avago at one time. This is a short. I would sell a call spread on this. I would not trade this in front of earnings. I'm not condoning that. Yeah, I'm not a buyer here. If anything, let's do a hypothetical. If earnings were already out on this stock, I'd be looking to sell a call spread, and I'd be more biased to the short side. So that's what I would do here on AVGO. Franklin, have a good night, my friend. Folks, thanks for being here. Don't forget to like, subscribe. You know the deal. And don't forget my 5-part video tutorial, top 5 favorite candlestick patterns below. Everybody have an awesome weekend and a profitable trading day tomorrow.